welcome. If you're a focused learner trying to master the absolute chaos of the global currency market, you are in exactly the right place. In today's explainer, we're unpacking the ultimate trader's playbook for navigating the foreign exchange outlook. We're going to take all these incredibly complex macroeconomic moving parts and distill them down into structured, actionable insights. By the time we wrap up, you'll have a crystal clear grasp of exactly how global money moves and, more importantly, how you can interpret those shifts.
Okay, let's dive into this. Just look at this breaking alert straight from our source material. Increased volatility, geopolitical tensions, shifting central bank policies. You know, this isn't just dry financial jargon. This is the reality of today's high-stakes global market. Every single day, world events are literally priced into the currencies we use in real time. And as this alert makes abundantly clear, the waters out there are incredibly choppy right now. If you don't know how to read the signs, you're flying completely blind.
So, here's our game plan for today. We'll start with the foreign exchange outlook, move on to reading the market playbook, then look at market drivers and breaking news. Follow that with tracking live currency rates, and finally wrap up with timing the US dollar.
Section 1. The Foreign Exchange Outlook, the Foundation.
Think of the foreign exchange outlook as your daily weather report for the global economy. Basically, it's a daily analysis report that interprets currency movements. Now, why do those currencies move in the first place? Well, it all comes down to economic data, political events, and overall market sentiment. The absolute best traders rely on this daily analysis because, let's face it, the environment is constantly shifting. Reading this outlook regularly is literally the key to spotting opportunities and dodging risks before they completely blindside you.
Section 2. Reading the Market Playbook, Strategy.
And this brilliantly illustrates the actual mechanics of extracting real, usable value from these complex reports. You don't just passively read an outlook, you have to dissect it sequentially. Step 1. You start by identifying which currencies are strengthening or weakening to catch that broader trend. Step 2. Analyze the hard economic indicators, specifically inflation, interest rates, and GDP growth, because those are the real heavy hitters. Step 3. Review central bank policies, since rate hikes or cuts are massive market movers. And finally, Step 4. Understand the expert market forecasts to help map out your upcoming strategies. It's just a beautifully logical flow.
Section 3. Market Drivers and Breaking News, Current Events.
Now, what we've got here are the major global macro factors causing some serious turbulence right now. These are the gears actually turning the global machine today. We've got the Federal Reserve interest rate outlook keeping everyone totally on their toes. We're seeing a massive volatility surge in the US dollar against the Japanese yen. We're also watching the Eurozone inflation report like a hawk, monitoring exactly how oil prices are rippling through currency markets and tracking a huge surge in global safe haven demand.
Let's actually zero in on that last point about safe havens, because it is absolutely fascinating. When geopolitical risks spike and oil prices shoot up, panic naturally starts to set in. So what do investors do? They scramble for stability. Right now, our source material highlights that this dynamic is pushing investors straight into the arms of the US dollar as a safe haven. The direct fallout from this flight to safety? Well, several major currencies are taking a huge hit, and we're seeing the British pound significantly weaken against the dollar as a direct result.
So, the crucial point is this number right here, 1. Because of this massive rush for a safe haven, a positive interest rate outlook, and strengthening economic expectations, the US dollar is currently heading toward its very first monthly gain in several months. After a pretty noticeable cooling off period, the dollar is seriously flexing its muscles again, and it is entirely driven by the macroeconomic factors we just talked about.
But, you really have to look at the entire board to understand the true outlook. While the US dollar has this immediate safe haven strength, there is a major long-term global policy shift currently being discussed. The BRICS nations, which include some of the world's major emerging economies, are actively exploring a shared currency, or at least an alternative payment system. Their stated goal here is to reduce the reliance on the US dollar in international trade. As focused learners, we're just looking at the data here, but make no mistake, this is a significant geopolitical development that could inject even more volatility into foreign exchange markets down the road.
Section 4. Tracking Live Currency Rates, Real-Time Monitoring.
Now, what's really interesting here is seeing those huge macroeconomic concepts translated into real-time fractions of a penny. This is a live snapshot of indicative forex market values. Look at the US dollar against the Japanese yen, up 0.34%.
But then look at the British pound against the dollar, down 0.11%. That reflects exactly that safe haven flight we just unpacked. Watching these real-time price changes is an absolute must because it reveals exactly how currencies react to economic news the literal second it hits the wire.
And how do you actually know when that news hits? Well, modern traders aren't exactly waiting around for the morning paper. To monitor these fluctuations, they plug directly into real-time news feeds. Our sources highlight 4 incredibly reliable feeds for this: Reuters, Investing.com, FX Street, and DailyFX. These RSS feeds deliver the live, up-to-the-second updates on central bank decisions and global trading activity that you absolutely need to make sense of all those blinking numbers on your screen.
Section 5. Timing the US dollar. Execution. This brings us to the question every single trader is constantly asking. Is right now a good time to buy USD? Well, it's a balancing act. You really have to weigh the two sides of the scale we've built today. On one side, you have the current immediate strengths, high safe haven demand, higher oil prices, and an upcoming monthly gain. But on the other side, you've got long-term global shifts in volatility, specifically those BRICS nations exploring alternative payment systems. Successful trading is all about constantly balancing this immediate strength against those long-term structural changes.
So, before you actually pull the trigger on an execution decision, our playbook gives us 4 critical analytical actions. 1. Monitor the specific economic indicators influencing the dollar. 2. Vigorously study inflation data and interest rate policies coming from the Fed. 3. Analyze your daily Forex news feeds carefully so you don't get completely blinded by breaking events. And 4. Take a step back to evaluate the overall global market conditions. Only when you've done all 4 of those are you truly ready to evaluate the right moment to enter the market.
Of course, applying all this analysis requires having a reliable platform to actually execute your trades. Our source material highlights a few top options for this. There's Xnis, noted for zero spread accounts and super fast execution. You've got AvaTrade, known for being an award-winning platform with some seriously advanced trading tools. And IC Markets, favored for low spreads and its MetaTrader 4 and 5 integration. Having a reliable, globally regulated platform is honestly just as crucial as having a rock-solid analysis strategy.
We have covered a tremendous amount of ground in today's explainer, from dissecting daily outlook reports to tracking safe haven flows and balancing real-time data against long-term geopolitical shifts. But you know, the market never stops moving. And that leaves us with one final thought to ponder. As global reliance on the US dollar faces entirely new alternatives, how will you adapt your daily Forex outlook strategy to navigate tomorrow's market volatility? Keep studying the data, stay completely focused, and use these tools to build your edge. Thanks so much for hanging out with me on this explainer, and keep learning.